everyone, welcome back to Prime Wealth. We're so glad you're here with us today.
Absolutely. Today, we're diving into something that's really gaining traction in the financial world: sustainable investing trends.
Right. It's not just about making money anymore, but also about making a positive impact. We're going to explore how you can align your investments with your values and why that's becoming more important for so many people over 40.
Exactly. We'll chat about some of the key trends shaping sustainable investing, how to identify investment opportunities that are not only profitable but also socially responsible, and share some practical steps you can take to get started.
And let's not forget, we'll also discuss how to balance your financial goals with your desire to make a difference. It's about finding that sweet spot where your money works for you and the world around you.
That balance is crucial. Plus, we'll look at some common misconceptions around sustainable investing that might be holding you back.
So, if you're curious about how your investments can reflect your values, or if you're just looking for some solid strategies to enhance your financial portfolio, you're in the right place.
Let's jump right in and start unpacking these trends. There's a lot to cover, and I think you'll find it really enlightening.
So, Alex, when we talk about sustainable investing, it's not just a trend, right? It feels like it's become this essential part of personal finance, especially for those of us over 40.
Absolutely, Jordan. As people hit their 40s and beyond, they start thinking more seriously about retirement. They're not just looking for a good return anymore. They want their investments to reflect their values.
Right. And with everything going on in the world, the climate crisis, social issues, it's almost like a wake-up call. People are realizing that their money can support companies and practices that align with their beliefs.
Exactly. And there's a growing body of research suggesting that companies with strong sustainability practices often outperform their peers in the long run. So it's not just about doing good. There's a financial incentive too.
That's a great point. With inflation being a real concern these days, many folks over 40 are looking for investments that can keep up. And sustainable companies often find innovative ways to reduce costs and improve efficiency, which can lead to better financial performance.
Yes, and let's not forget the emotional side of this. A lot of people want to feel good about where their money is going. Imagine being in retirement and knowing that your investments are contributing to a healthier planet or supporting social justice initiatives.
It's like a 2-for-1 deal, right? You're not only working towards your financial goals, but you're also leaving a legacy.
Exactly. Think about someone in their early 50s who's starting to plan for retirement. They might have kids heading off to college or even grandkids. The idea of wanting to hand down not just wealth, but also values can be incredibly motivating.
And as they look at their retirement timelines, it's becoming clear that they'll need to make their money work harder. With rising costs and uncertainty, sustainable investing can provide a way to potentially buffer against those risks.
Definitely. Plus, there's a statistic that's been floating around. Something like 70% of millennials are interested in sustainable investing. That's a huge shift. So for those over 40 looking to pass down financial wisdom, aligning with these values can really resonate with the next generation.
You're right. If parents are investing in sustainable companies, they're setting a powerful example for their kids. It's like saying, here's how I built wealth, and here's how you can do it too, while caring about the world.
Absolutely. And with the rise of ESG, environmental, social, and governance metrics, investors are starting to see that these factors can significantly affect a company's long-term success.
So it's not just about the immediate returns, it's about looking at the bigger picture.
Exactly. And let's not forget the impact of recent economic trends. The pandemic shifted many people's perspectives on work and life. It made them rethink what's important. And for many, sustainability became a priority.
Yes, and I think that sense of urgency is palpable. As we age, there's a realization that our time to make an impact is limited. Investing sustainably allows us to contribute to social and environmental change, while still planning for our financial future.
Right, and if we think about inflation and the rising cost of living, sustainable investments can sometimes offer a hedge against that. For example, renewable energy companies are often at the forefront of innovation, which can lead to strong growth even in tough economic times.
That's such an important point. It's about finding opportunities in the midst of challenges. And for those in their 40s and 50s, balancing growth with values is becoming a key investment strategy.
Yes, and let's not overlook the fact that many people over 40 are also considering their health and well-being as they approach retirement. Sustainable companies often prioritize employee well-being and community engagement, which can create a more stable investment environment.
So it feels like sustainable investing is really about aligning our financial goals with our personal values, right? It's about crafting a life that reflects who we are and what we care about.
Exactly, and I think it's also about resilience. In a rapidly changing world, investing in sustainable practices can create a more stable foundation for the future.
That sounds great. So for someone listening who's feeling inspired by this, what practical steps can they take to start investing sustainably?
Well, first off, it's important to educate yourself. Look into funds that focus on sustainability or consider companies that are committed to ESG principles.
And I guess it's about doing your homework, right? Understanding what companies or funds you're investing in and how they align with your values.
Yes, exactly. You might even find that some of your current investments don't align with what you believe in, and that's okay. It's never too late to make changes.
It's like a financial reset, isn't it?
It is. And as you start this journey, try to connect with like-minded communities. There are plenty of online forums and local investment groups focused on sustainable practices.
That sounds really supportive. And I imagine that sharing experiences and strategies could be super helpful.
Definitely. So those are some immediate steps you can take. Now, let's bring everything together and look at some core strategies to align your investments with your financial and personal goals.
So let's dive into some of those core strategies for sustainable investing. What are the most practical steps someone over 40 can take to get started?
Well, the first thing to consider is setting clear goals. You want to ask yourself, what do you want to achieve with your investments? Is it retirement security, funding a child's education, or maybe even supporting a cause you care about?
Right. Having that clarity is crucial. And once you know your goals, how do you align your investments with them?
A good approach is to create a sustainable investment policy statement. This is essentially a blueprint for your investments. It outlines your goals, risk tolerance, and the specific criteria for what you consider sustainable.
That sounds really helpful. What kind of criteria should someone include in that statement?
Well, you might want to focus on sectors that align with your values. For instance, if you're passionate about renewable energy, you could prioritize companies that are leading in that space. Likewise, if social responsibility is important to you, look for companies with strong track records in diversity and community engagement.
So it's about finding that balance between personal values and financial returns, right?
Exactly. And another key strategy is to look for funds that specialize in sustainable investing. These could be mutual funds or exchange-traded funds, ETFs, that focus on companies meeting specific environmental, social, and governance ESG criteria.
Yeah, I've heard about ESG funds. Are they typically more expensive than regular funds?
They can be, but that's not always the case. It's essential to compare fees and performance. Sometimes, what seems more expensive up front can actually lead to better returns in the long run. So you want to look at the total cost over time.
That makes sense. What about the actual process of investing? Should someone just dive in or take a more measured approach?
It's usually better to start slowly. Consider dollar cost averaging, where you invest a fixed amount regularly, regardless of market conditions. This approach can help reduce the impact of volatility, which is especially important in sustainable sectors that can be a bit more unpredictable.
So you're essentially spreading out your investment over time instead of putting all your money in at once?
Exactly. This way, you're not trying to time the market, which is notoriously difficult. Plus, it can help you feel more comfortable with the process.
I see. And in terms of selecting specific stocks or funds, any tips on how to research those?
Absolutely. Start by looking for sustainable ratings and rankings from reputable sources. Websites like MSCI and Sustainalytics provide insights on how well companies perform in regard to ESG criteria. You could also read annual reports and sustainability reports from the companies themselves.
That sounds like a lot of research. Is there a simpler way to get started, especially for those who might feel overwhelmed?
Definitely. Consider robo-advisors that focus on sustainable investing. They can help tailor a portfolio based on your goals and values, without you needing to do all the heavy lifting. Just be sure to check their investment philosophy to ensure it aligns with your beliefs.
That's a great option for people who might feel intimidated. What about keeping track of your investments once you've started?
Monitoring your investments is key. Set a regular schedule, maybe quarterly, to review your portfolio. Look at how your investments are performing and whether they still align with your initial goals. It's also a good time to reassess your risk tolerance as life changes.
And if someone finds that their investments aren't performing as expected, what should they do?
First, don't panic. Sometimes markets shift, and it's normal for investments to fluctuate. Evaluate whether the fundamentals of the company or fund have changed. If they haven't, it might be worth holding on, or even adding more funds.
But if it's clear that a particular investment no longer fits your criteria, you should be ready to make a change, right?
Absolutely. Being flexible and willing to adjust your portfolio as needed is crucial. It's about finding that balance between sticking to your values and adapting to market realities.
I love that. And what about tax implications? Are there any specific strategies for sustainable investments?
Good question. Tax-efficient investing can make a big difference. Consider using tax-advantaged accounts like IRAs or 401ks for your sustainable investments. This way, you can grow your investments without immediate tax implications.
And if someone invests in a taxable account,
they should be mindful of capital gains taxes. Try to hold on to investments for over a year to benefit from lower long-term capital gains rates. Also, consider tax loss harvesting, where you sell losing investments to offset gains.
That's a smart strategy. It sounds like there's a lot to consider, but it can be rewarding when you find the right investments that align with your values.
Exactly. It's about being intentional and informed. Now, as we talk about these strategies, it's also important to be aware of some common pitfalls when it comes to sustainable investing.
Oh, for sure. What are some of those pitfalls that listeners should watch out for?
Well, one common issue is falling for greenwashing. That's when a company exaggerates or misrepresents its sustainability initiatives to attract investors. So thorough research is vital.
Right, you can't just take a company's word for it.
Exactly. Another pitfall is over-diversifying. While it's good to have a mix, spreading yourself too thin can dilute your potential returns and make it harder to track your investments.
So focus on quality over quantity.
Precisely. And finally, many investors underestimate the importance of patience. Sustainable investing can require a longer time horizon to see meaningful results compared to traditional strategies.
That's a crucial reminder. It sounds like a lot of thought and care goes into sustainable investing, but it can really pay off in the long run.
It definitely can. So those are some immediate steps you can take. Now let's bring everything together. So when we talk about sustainable investing, it's really important to highlight some common pitfalls that people often run into.
Absolutely. Like, one of the biggest mistakes is assuming that just because an investment is labeled sustainable or green, it's automatically a good investment.
Right? That can lead to a false sense of security. For example, I once had a client who invested heavily in a company that had a great marketing campaign about sustainability. But when we dug deeper, we found out their actual practices didn't align with their claims.
Oh, that's frustrating. It's easy to get swept up in the marketing. How can someone avoid that kind of situation?
Well, one red flag to watch out for is a lack of transparency. If a company isn't clear about its sustainability practices or goals, that's a warning sign. You want to see concrete data like carbon footprints, waste reduction efforts, and how they're measuring their impact.
That makes sense. It's like any other investment, right? You wouldn't just invest in a company without understanding its financials.
Exactly. Another common pitfall is not aligning investments with personal values. I've seen investors put money into funds that sound good on paper but don't reflect what they truly care about.
Like what, for instance?
Well, say you're passionate about environmental conservation, but you invest in a fund that has significant holdings in fossil fuels. That disconnect can lead to dissatisfaction over time, and it might even affect your long-term commitment to investing sustainably.
So it's important to really examine what matters to you personally.
Yes, and another issue is the misconception that sustainable investing won't yield good returns. Some people think they have to sacrifice profit for their values.
Oh, definitely. I've heard that a lot. But isn't it true that many sustainable investments have actually outperformed traditional investments?
Absolutely. There's a growing body of research showing that companies with strong sustainability practices can outperform their peers. But it's critical to do your homework and choose wisely.
And then there's the danger of greenwashing.
Right. Greenwashing is when companies make exaggerated or misleading claims about their environmental practices.
It's like they're just slapping a green label on their product without doing the actual work.
Exactly. For example, there was a well-known beverage company that marketed a new line of eco-friendly bottles. They promoted them heavily, but in reality, they were only slightly more recyclable than their regular bottles.
Wow, that's sneaky. So what should someone look for to avoid being misled?
Look for third-party certifications or ratings. There are organizations that evaluate companies based on their sustainability practices. Getting that independent validation can really help you feel confident about your investments.
That's a great tip.
Another mistake is focusing solely on the short-term gains. Sustainable investing is often about long-term impact, both financially and socially.
Right, and that can be tough in a world that's so focused on immediate results.
Definitely. I had a client who panicked and sold off her sustainable investments during a market dip, thinking she was losing money. But when we reviewed her portfolio, those investments were actually poised for growth in the long run.
That's such a common reaction in volatile markets. So what's a good strategy to avoid that kind of mistake?
Staying informed and having a well-thought-out investment strategy is crucial. Regularly reviewing your investments with a financial advisor can help keep your emotions in check.
And it's about having a plan, right?
Exactly. Setting realistic expectations and knowing your investment horizon can help you stay the course, even when things get rocky.
And speaking of rocky, let's not forget about the emotional side of investing.
Yes, sustainable investing can sometimes feel overwhelming, especially with all the information out there. People might hesitate to invest because they feel they don't understand it fully.
That's so true. I've talked to friends who wanted to invest sustainably but were too intimidated by the complexity.
Education is key here. There are lots of resources available, from books to online courses that can help demystify sustainable investing.
So it's really about building your knowledge base and not being afraid to ask questions.
Exactly. And another common mistake is not diversifying your sustainable investments. Just like traditional investing, you want to spread your risk.
Right. Putting all your eggs in one basket can be risky.
I had a client who only invested in one sustainable tech company. While it was a strong performer, when the sector faced a downturn, her portfolio took a hit.
Ouch.
Yeah, it was a tough lesson. Diversifying across different sectors, even within sustainable investments, can help mitigate that risk.
So it's essential to think broadly and not limit yourself to just one area of sustainability.
Absolutely. And let's not forget about the importance of regular reevaluation of your portfolio.
Oh, for sure. I think a lot of people set it and forget it, but that can be a mistake.
Exactly. Markets change, companies evolve, and your own values might shift over time.
So how often should someone be checking in on their investments?
Ideally, at least once a year. But it's also good to stay informed throughout the year. Regular check-ins can help you adjust your strategy if needed.
And if someone notices they're making some of these common mistakes, what's the next step?
Well, recognizing those mistakes is the first step to recovery. From there, they can seek guidance, educate themselves, and start to realign their investments with their values and goals.
That sounds like a solid plan.
So those are some immediate steps you can take. Now let's bring everything together.
So now that we've dived into some of the trends in sustainable investing, let's shift gears a bit. What are some immediate actions our listeners can take if they want to start investing sustainably?
Absolutely. One of the first steps is to really assess your current investments. If you're already investing, look at your portfolio and see where you might have companies that don't align with your values.
Right, and you can do that with various tools, can't you? There are apps that help you evaluate the sustainability of your investments.
Exactly. Platforms like Sustainalytics or Morningstar offer ratings on how sustainable different companies are. You can check the ESG scores, which stand for environmental, social, and governance. It's a quick way to gauge how your investments align with sustainable practices.
That's super helpful. And for someone who might not have a lot of experience, where's a good starting point for making those changes?
Start small. You don't have to overhaul your entire portfolio all at once. Maybe begin by allocating a small percentage of your investments into sustainable funds or ETFs. There are funds specifically designed to meet sustainable criteria.
So let's say someone decides to invest, say, 10% of their portfolio into sustainable funds. What would be a good way to find those funds?
Look for funds that are labeled as socially responsible, impact investing, or sustainable. Websites like Morningstar can help you filter through options based on your preferences.
And what about those who are just starting out and haven't invested yet?
Great question. If you're new to investing, consider starting with a robo-advisor that focuses on sustainable investing. Companies like Betterment or Wealthsimple have options tailored to socially responsible investing.
That makes it so much easier. You set your goals and they do the heavy lifting for you.
Exactly. And it's often a low-cost way to enter the market. Plus, many of these robo-advisors will help you set your risk tolerance, which is really important.
And let's not forget about education. Are there any books or resources you recommend for listeners who want to learn more about sustainable investing?
Definitely. The Responsible Investor by Brian D. Moore is a great start. It outlines how to integrate sustainability into your investment strategy. Another good read is Investing for Change by R. Paul McCulley, which highlights the benefits of sustainable investing.
Those sound like excellent resources. And what about online courses or workshops?
Yes! Many platforms like Coursera or Udemy offer courses on sustainable investing. It's a great way to deepen your understanding at your own pace.
For someone who prefers to learn through podcasts or videos, what should they look for?
Look for financial podcasts that focus on sustainable investing. They often have interviews with experts in the field, and you can learn about real-world applications and success stories.
That's a fantastic idea. It's all about finding what works best for you, right?
Exactly. And while you're learning, it's also important to build some habits. Start by setting aside a specific time each week to review your investments and stay updated on sustainable trends.
And maybe even follow some thought leaders on social media?
Absolutely. Engaging with like-minded individuals can provide insights and inspiration. It keeps you connected to the community and the latest trends.
Speaking of community, are there any organizations or groups our listeners can join for more guidance?
Yes, organizations like the USSIF, the Forum for Sustainable and Responsible Investment, offer resources and networking opportunities. They can connect you with others who share your interests.
That's a great way to learn and grow. And for those who feel a bit overwhelmed, what's a simple, actionable checklist they can follow to get started?
Sure. First, assess your current investments for sustainability. Second, consider reallocating a portion of your investments into sustainable funds. Third, educate yourself through books, online courses, or podcasts. Fourth, set a regular time to review your investments. Finally, engage with communities or organizations focused on sustainable investing.
That's a solid plan. And I love how it's all about taking small, manageable steps.
Yes, and remember, it's a journey. You don't have to have everything figured out right away. Just start with what you can and build from there.
And as they start taking these steps, it's important to maintain a long-term perspective, right?
Absolutely. Sustainable investing isn't just about the immediate financial returns. It's about creating a positive impact for the future, both environmentally and socially.
That's such a powerful point. It really shifts the focus from just making money to making a difference.
Exactly. And as you become more comfortable and knowledgeable, you can continue to adjust your strategy and even advocate for more sustainable practices within the companies you invest in.
It's empowering to know that every little action can contribute to a larger change.
Definitely. So those are some immediate steps you can take. Now let's bring everything together.
All right, so let's wrap this up with some key takeaways from our discussion on sustainable investing trends.
Absolutely. First off, It's important to remember that sustainable investing isn't just a trend. It's becoming a fundamental part of how many investors make decisions today.
Right, and that brings us to the second point. It's not just about financial returns anymore. People want their investments to align with their values, whether that's climate change, social justice, or ethical governance.
Exactly. And then there's the fact that sustainable companies often show resilience during market downturns. It's a smart strategy for long-term financial security.
Yeah, and let's not forget about the variety of options available now. From mutual funds to ETFs, there are so many ways to invest sustainably.
And the data is clear. Investors are increasingly looking for transparency and accountability in the companies they support.
It really is an exciting time for those looking to make a positive impact while building wealth.
And speaking of building wealth, remember that starting small is still progress. You don't need to go all in at once. Just taking those first steps can lead to significant change over time.
So if you enjoyed this conversation or found it helpful, please hit that like button, subscribe, and share with someone who's 40 and over. We want to keep this dialogue going.
And we'd love to hear your thoughts in the comments. What are your experiences with sustainable investing?
Absolutely, we're all learning together here.
And next time, we'll dive into a review of the best money apps out there.
Yeah, you won't want to miss that.
Until then, keep focusing on your financial journey, and remember, every step counts.
Bye for now.
Take care.